That's you know. Hi guys. Hello guys. Oh my God. What did I do? Nobody. In the morning. Penalty. Dinero super, super. Hey, no, they bad mood. They are out. Hi, type active. You can hear me, just type active. Good afternoon. How are you? Can you guys hear me? This. Can you guys hear me? You can hear me, just type active. Type active, type active. All right, that's great. Let's get 10 people and we get going. 10 people and we get going. We are still having 8 people, 10 people, and we are going to start. Ten people, let's go. All right, 10 people. So good morning, afternoon, whatever time you have going on there. I hope you guys are doing okay. So I want to work with your, anyways, we said we're going to analyze AUD card. Is it AUD card with AUD JPY and GBPJPY? Let's look at GBPJPY first. Just going to share my screen. I'll constantly check to see if you guys are seeing. You can see my screen. You can see my screen. Just type screen. Suddenly you can see my screen. Guys are flexible. Thank you. If you can see my screen, please type screen. All right. That's awesome. Thank you, Zay. Let me pronounce it correctly. So we are going to do cards. Yep. It's freezing going on something like that. Good. Let's look at GBPJPY. Clear the chart. I think this was some analysis last week. And it's really misbehaving. Okay, as we all know, we started our top-down analysis. The weekly time frame. The weekly time frame, I'm more interested in the market direction and the previous week's candle. So previously we had a bearish. Last week, GBPJPY was buying, but it ended as a bullish candle, but gave us a lot of rejection. And I hope that you know that the rejection is because you see the previous week we had the same rejection here. The previous week we had the same rejection here. And so last week the market went up and then the sellers pushed it down, but it finally closed as a bullish candle. So this week we are going to be looking at two things. I basically first this like this. On the really time frame, right? I just like to do it simple. Today is Tuesday, and I'll be expecting price to give me a bearish move. I'll be expecting price to give me a bearish move. If it moves down, it moves downward. I know that on the smaller time frame, USD is already buying. But now I'm not in the buy trade, and I'll only buy when I have price cross this above this candle. Right? When I move to a smaller time frame, you're going to see it. Let me check if you guys are very interested. Can you see my screen? Okay, the pair was analyzed yesterday. Ah, I see. So which pair should we analyze? Zay, I want to hear from you. All right, that's great. That's great. But then you see where I'm coming from, right? From the weekly time. Let me just copy what I was saying because it's not too bad, right? You guys can still just look at it. But I will not go down since you guys analyze it. This is a weekly time frame. I'm looking at the market direction. I have a very strong demand zone below. I have a very strong resistance zone here and a very strong resistance zone here. Now I look at the previous week. What happened the previous week? Rejection. Then today, yesterday and today, the market has been doing something here. So now the market is currently bullish on the smaller time frame. So immediately price breaks this line. You obviously know I'm a breakout trader. So immediately price breaks this line, which we are going to see on the smaller time frame, is going to be like a mini resistance or something. Then we are going to be can be in a bullish trade till that high. But if price keeps going down, I'll just look for an entry from the 1 hour time frame. That's the line I talked about. And you see that the market is going really bullish on this. But then this is a downtrend. It's a downtrend. Some people are already in the trade and their CP is up here. Some people are really hit TP. I think the first TP for this trade was somewhere here, and the second is up here. So basically, you have something like this. You're going to get a symmetric triangle. We have 9 more minutes of price to break this level. If we have to break out of this trend line and break out above, we are experiencing something like this, which is what I like to look at. Then we'll have a bullish move. Let's say here, for the rest of the week. If that's what happens, or price can still get here and then fall. But if it successfully breaks this zone, we are going to have a move up. But if it does not, then I'll be expecting the price to break down here, and the price to go back down, come back down here, and give me something like this. Basically, something like this. But the demand zone down here is still strong. So if you're looking at this zone as a trap, or let's just say TP1 for those who will be selling if it breaks out down, and this zone up here for TP1 for those who will be buying if it breaks out above. All right. So what I look out for when I'm trading the breakout is the candle should break out of the zone and close like really above with a very big momentum, right? and then I'll wait for the retracement on the smaller time frames. In 15-minute time frames, usually I go to the 15-minute time frames, look at my retracement, and then look at the zones where I could place my stops. But the zones are always valid. You can see this zone I drew right from the weekly time frame, and it's valid to the 15-minute time frame. It's like price has to break out above, and rest assured that this is a weekly time frame zone that has been broken. So there's a high probability that the market is going to respect if it gets broken up, and then I'll just wait for the retracement and enter. If this zone breaks below, that's a weekly time frame zone. I don't like to trade within this zone. I will not even try it. If I had to be basically I was in the trade in the morning from here, so the TP has really been hit and it's out and everything. So this rectangular zone that is giving consolidations is good to be avoided. You go to the 40. But is there any question for this? You have Euro USD, you have UG. UG moves the same as UG. Let's look at UJ. They were going to look at Euro USD and they will finish with AUDCAD. But I'm sure you've seen what I've done for GJ and you should know your expectations. Please, can you guys hear me? If you can hear me, just comment. If you have seen what we have done for GJ, just comment seen so that you know you're following up. While you look at, let me look at fundamentals for USD. See if there's any fundamentals before we analyze USD JPY. Okay, that's nice. High impact USD news, just one to basically my African market. In 1 hour. As of the last business day of the month, United States, it's about what you job openings. Consensus period. Okay, it might affect, but not much, just one. So let's look at USD So you can watch out for GBPJPY. I'm also watching for it. And if you have rejections from that zone too, you can also sell. You can have a short sell. If you have rejections from this zone, because it's a downtrend. And according to the downtrend rules, when price retraces, your trading retracement is a very good period. You could just wait for a confirmation to enter a sell, not that you're entering a sell now. You're trading retracement, wait for confirmation to enter your sell, and then you pull out when it reaches the support zone and wait for a breakout. There are just too many opportunities. But this rectangular zone is a no-go zone for me. Okay, let's look at UJ. UJ moves almost 70%, 70%, 70% like GG. Weekly time frame. Weekly time frame, you have a very, you have a very strong zone down here. Very strong support zone. We are selling for more than how many weeks, basically. And the second thing we are looking at is this resistance here, right? And then the closest resistance to the price, which is this. We had that zone touched twice, that's 1, 2. And then price got to this zone, which was, yeah, it was a resistance previously, and then rejected. Another that's too many lines, but then. So we look at the market direction. First of all, the market is downtrending. We have a downward move of the market towards this area. But if you look from June 2023, it's quite the market is in a range. We had an upward move of the market. The market got to this level and started doing range. So we have something here like and the entire move head and shoulder pattern down, something like that. But it's a very big. It's a big move because it's a weekly time frame. You cannot just wait to trade the head and shoulder pattern like that. You have to take small moves, especially as in a weekly time frame. So the next thing that we look at is the previous week's candle. You are seeing me just listen. Please, if you can see me, say spin. Can you guys see me? Please, you can see me, say spin, so I don't explain when you guys cannot see. They're not active. Are you active? Are you guys active? All right, that's nice. So, like we're saying, we look at the overall move of the market direction, and then you look at the previous week's movement, right? So now, price got here, rejected, got here. Last week, we had a bullish move. Now, normally, when you see this particular rejection candle here, the next thing that comes to your mind is price is going to move down. So, those who got this trade, that was powerful this entire week. So, the next week, which was last week, we had a bullish move from here, probably triggered by this support zone here. Let me delete this one down and map that one so that we should not have too many lines. Probably triggered by this support zone. Now, the price got to the support zone, what happened? It bought and it got to that resistance zone, which this is it. I'm looking at the zone because it's the 1 week time frame. If I go to the smaller time frame, you're going to see. I just want to explain here so that when we go down, you see everything. Let me clear this too. So now, price left the support zone, moved up to this previous week's high. We had 2 weeks. The market got here for 2 weeks. The previous week's high. We got here and then rejected before breaking up with this, giving us a liquidity sweep and coming down. So the market went up, got to this previous week high, and what happened? Started rejecting, and then closed still as a bullish candle, right? So this week on Monday, the market opened at the support and bought. They actually bought to where it is now. So according to my analysis, I'm going to be in a bullish trade. Basically, I'll look at the smaller time frames and all of that. But now, if I want to hold a trade for long, we'll go to the smaller time frame and see all of that. I'm going to have a breakout from here. Because the market is really buying. Basically, the market is really buying. So I'll be expecting a breakout from here. What is that going to imply? This candle is going to be a bullish candle, basically, right? It's going to be a bullish candle by the time it rejects you, this level. Then we'll have a short buy to the upside. Where USD is going to buy. Let's look at the daily candle. I always look at zones where I have to break out. Like there's none of that. Then I can start looking at retracement. Now we have downtrend. I'm sorry. Can you guys hear me now? Oh, I actually muted this mic. Yes, thank you, thank you, thank you, thank you. I'm sorry. Trust you. Okay, because there was no sound, I'm going to take it over. This is what we're saying. We have strong zones here. We have this strong support zone. I'm not going to mark this for now because of, anyways, let me do it. Because there's some people here that was for the first time. You have this strong support zone here, right? The market a lot of times and went down. We have this strong resistance zone here. Now, from this resistance zone, what do you see? So the current market price, so analyzing from left to right, the market is falling. For the longest period of time, USD has been falling according to this chart, right? I'm not able to get rid of this stuff. That's what I was. A bullish move. Last week we had a bullish move, and then the market rejected from above and closed down, literally. But it closed still as a bullish candle. We had a bullish move as I was explaining because, sorry, we had a bullish move because this is a support zone, so price was moving up. Price was moving up due to the rejection here, right? I mean, yesterday and today, price has been rejecting on this current candle. Let's move to the daily time frame. On the daily time frame, we still have an overall downtrend. But the current market, the current candle is green. The current candle is bullish because we have a support zone here. We have a support zone here. I'm just going to map it with the horizontal ray. We have a support zone here. This support zone has occurred for a couple of days. 1, 2, 3, 4, 5, 6. So the market literally is moving up based on this candle. But now what am I saying again? I'm saying I'll be expecting from the end to the beginning time frame. Let me explain what I'll say. I'm saying that if USD has to buy for the longest time, I'm not going to be expecting a long-term trade now. If USD has to buy for the longest period of time, what am I going to do? As a breakout trader, I'll look at the previous week's candle. Look at the previous week's candle, right? It literally closed here. That's where I'm going to be expecting the bullish move to start from. I said a long-term bullish trade. I'm going to be expecting the bullish move to start from there. To start from there. So if you go to the smaller time frames, you're going to see that zone. Now let's go to the daily time frame. You see that we are having number one an overall downtrend. So I cannot really buy. Now we are trading on the 15 minutes, 5 minutes, we have a very decent buy trade here. So I think that's the take profit zone because we have a resistance here, or it's almost hitting the zone, right? Which is very, very okay. But now the market has really bought. There are two things involved. Either you wait for a retracement or you just wait for the market to break out this zone and then you get to a long-term trade. So now price is forming a bullish candle with so much bullish momentum from the daily time frame. But we have an overall bearish trend. You cannot ignore that. Even these three daily time frame, daily candles here, these three red daily candles still give you a downtrend from the smaller time frame. This is what we have here. Let me look at what you guys are seeing. Still not the sound. Hey God. Why is it always on my day? This is not fair. Okay, this is what you stop hearing for. Tell me where you stop hearing from. Can you see my screen now? So tell me where you stop hearing from. Josiah, please tell me where you stop hearing from. Sorry. Sorry, the market is doing something. It's not the market, my screen. I don't know. And happening. There, tell me where you stop hearing from so that I can start from there. So when I'm doing the breakdown next time, I'm going to connect my phone so that I can see if I'm seeing. Please tell me where you stop hearing from now. It means that when you stop seeing, you stop hearing. Hey, from the daily time frame. Wow, that's nice. Thank you. Let's take it over. This is what I was saying. From the weekly time frame, overall downtrend. Last week we had a bullish candle, but what happens? The market was rejecting, right? The market was rejecting, and then it finally closed in a bearish candle, as a bullish candle rather. Now look at the zone, look at the candle, look at the candle where the market closed. I placed a horizontal ray there where the market closed last week, because it closed with a bullish candle, even though it's not a bullish momentum candle, but then the body is big enough, right? So the information I'm getting here is that there's a probability that there might be buyers in the market. There's that probability that there might be buyers in the market pushing the market upwards. That's the information that this candle is giving me. That even though we're having a bearish move, there might be buyers eventually in the market pushing the market to the upside. Now, if I want to hold this for a very long time, I'll basically wait for. Okay. So I'll basically wait for price to break above this level for me to hold the trade for a very long time. Supposedly to this level, right? But now this is the weekly time frame, and we cannot ignore whatsoever is happening on the smaller time frame. That's why I thought I explained that on this weekly time frame, we have a minor support here, and then we have this major support zone here. So you see this bullish move here was reacting to this minor support, which probably occurred. It took about 5 to 4 days for this particular support to be very strong, right? Now, this is one time you see what USGPY is doing. For the longest time, USD has been falling. So basically, if you want to be buying USD for the longest time too, you should have a breakout from this level, whatever strategy you're trading, whatever works for you. Now, if you go to the daily time frame, you notice that yesterday USGPY was selling, and it reacted to this bearish rejection candle here, where the market closed below the previous day's open, because that was a bullish candle. It closed below, and basically we had a move to the downside. Got to the support, and then we are having a move to the upside. So from 12 or from 10 and 12, the market has been buying for this particular pair. But the market has been buying for a long time. like I explained. So if you want to be in a trade, you only wait for the retracement. You cannot wait for a retracement on a bigger time frame. If you want to enter a bullish trade, you wait for a retracement on a smaller time frames. Mostly 1 hour. If you're waiting for a retracement at this zone here where you had previous resistance becoming probably a support, you had this here triggering this move above, or you wait for the retracement right down here. But let's say if you're waiting for the retracement at this zone, I hope you guys are hearing me now. My backspace is not working. I don't know what that is. Let's see if you're hearing me. Are they hearing me? Can you see the? Yeah. So we are going to be waiting for a retracement. Like I said, if you must enter this trade, we should wait for a retracement to this level. So this is we are going to wait for a retracement to this level. Sorry, my stops are not working today. I don't know why. To this level. So when price retraces here, then we can continue buying to take our TP here, right? Yeah. But now I'll start buying UG if it crosses this zone. Crosses this zone. So I'm basically going to have something like this. Basically going to have something like this. And if you know that the breakout is the magic that I'm waiting for. So if it breaks out from this zone, that's what I'm going to be entering and then expecting the market to take us right up to this level. And for those who are already in this trade, that's nice. For those who are waiting for a retracement, let's go to the 15-minute time frame to see what happens. So this is the 15-minute time frame. We still have a downtrend. If we are doing a trend line here, we have a break and retest, and then we have the movement to the upside. Downtrend here, the breakout was from here, where you have the market moving this previous swing, right? So we started having a break, retest to this zone, and then the market now is moving up. The market is moving up. So we're going to wait for a retracement right down to this zone before we have an entry to the upside. This zone because we know a minus support and moving up. So basically waiting for a retracement to this zone. And no, there are two things about trading retracement. Either your retracement does not get triggered, right? Or it gets triggered. I don't really like either your retracement does not get triggered or it gets triggered. I mean retracement, not retracement after breakout. Not retracement after breakout. I mean retracement during momentum moves. Like what we have here. Look at the 30 minutes, you're going to see that there's very big bullish momentum. So but this candle has about 8 close, right? You can consider the 30 minutes as an entry. If it closes still as a rejection candle, probably it's going to close bullish. Then you can enter the trade, right? But look at what happens here. This is a resistance zone. Like I basically don't like this kind of short entries and then risking. Maybe you're going to be scared that the market might move down here to sweep this zone before taking and stuff like that. So I just wait for a peaceful breakout above right now to the 15-minute time frame. My breakout room is valid. I'll do a peaceful breakout above here. It's going to make this resistance and then retrace and give me now an entry. So that's it. Let me get your question. Like I said, I was really in this trade in the morning and yeah, that's beautiful. And it hit CP basically around somewhere here. It was a really short term trade. I like the way this screen just goes. If you're seeing my screen, you're going to basically discover that it's showing that sharing. It's not sharing. Okay, so that's what we said. That's what we said. That's what we said. Wait for the count. If you want to trade, if you want to enter a buy on this pair, wait for the 6 minute candle for the 30-minute candle to close. Close this in 6 minutes. And after 6 minutes, if it closes as a bullish rejection candle, you're going to enter because it's a support zone here. So basically, it's going to be respecting this support breakout. We have something here. There. So wait for 6 minutes. It's already giving rejections. Just wait for 6 minutes. After 6 minutes, it closes above. It closes here as a bullish rejection candle for palm. Then you can have a buy. Sorry for the disappointments. It's a lot of technical issues. But did you understand what I was saying? The screen is not showing again. Is it showing now? Sorry for the disappointments. It could be network. It could actually be network because none of this gadget has a problem. It's network. So I was saying that you should wait for the candle to close. And if it closes as a bullish rejection candle before you enter. If it closes as a bullish rejection candle here, you're going to be entering your stop loss below. Or you just wait for it if it retraces to this zone. But there's a problem with retracement. The market might retrace and not retrace directly to your zone, right? It just retraces somewhere around your zone and give you. So I would say that if you're waiting for a retracement to this particular zone where we have placed a line, then you should rather, this is what I'll do. If I have to place a retrace, take a trade here. This is what, can this see my screen, please? Can this see my screen? Okay, this is what I'll do. I'll wait for price to close, and if it closes as a bullish rejection candle, I'll place my stop loss below this zone because there's a probability that the market might still retrace below 14.1266 if it has to go down, right? So I'll put my stop loss below. That should look at what? The M. Yeah, the screen is showing now. What I'm saying is that if I have to enter, considering this a retracement, you have to wait for 3 minutes, then this candle close, right? And I'll only enter if I see a bullish rejection candle. That's what I've explained. And if you enter here when you're seeing a bullish rejection candle, probably your stop loss will be below. Why? This is an ideal zone. Previous resistance should become a support. This is an ideal zone. So the market will give you a bullish rejection candle here and literally just move a little bit, come down and clear everybody else that entered here before properly moving up. So you have to be very smart when you're in the market because we have a very strong bearish move here. So just be very smart. Place your stop loss at safe zones. All right. Yeah. Please ask a question. We have had a lot of disturbances today, but I'm pretty sure that it was a network. The network has a problem. And then my screen, my mouse is not respecting me. When I want to do something, I'm not able to get rid of the stuff. So that's basically it. When you see this, you don't just enter, you don't just start buying. You cannot just start buying. Just wait for the candle to close, and then if you're buying, it's not just shoot right down here. But normally the retracement should occur at soon. The retracement should occur at soon. Like, let's look at the 1 hour confirmation. Okay, same thing, probably the market is going to move up. 15 minutes. That's if you really quick. 5 minutes. Yeah, we have the retracement for here. So just wait for 1 minute, enter the trade and put your stop loss here. Basically, Let's see. We're entering somewhere there. Now this will be too much now. Anyway, it's not that much. 41 pips. Let's see what RR is going to give. 1 is to 1.5. Very low probability. Very low probability trade. 1 is to 1.5. It has to be 1 is to 2. We have a very strong resistance zone here in the weekly time frame. Cannot ignore that. That's why I'm saying that I'll just wait for price to break out from above. Are you guys seeing with me? Maybe I'll okay, 1 is to 1.5. Now you might be asking why I'm not putting my stop loss here. Here. What is it? Okay, let's say you might be asking why my stop loss is not here. Let me just use this thing. That's a zone. That's a zone, yes. But look at what's below. We have a lot of candles below, no strong zone to support you. That's a 5-minute time frame, so you cannot really rely on this as a strong zone. The market moves, it retraces, it does a lot of things. So this might be a very good trade, but because your stop loss is too tight, what happens? The market removes you, right? I initially said that we're going to wait for retracement to this zone, but now there are some persons that are going to want to enter immediately. After that retracement, we had a 15-minute time frame. Let's look at say or 30 minutes. Yeah, so the candle closed as we said. We had a bullish rejection candle, and then price is going to moving up. Yeah, stop loss is going to be here. And take note, it's a 1 is to 1.6 trade, not really a high probability trade. But aiming for 68 pips. It's not bad, but it's a very low probability trade, right? Low probability in the sense that our stop loss is almost the same like the take profit. So you should be wise enough to see zones. This is what we do with this kind of trade. When price gets to this resistance, you do what you break even to entry. It's not a good advice. But then if you are not scared, you lose your money. If you are scared, break even. If you're not scared, allow the trade to move. Okay, let me listen to I want to listen to I'm not going to pronounce the name well because I literally don't know it. Let me listen to Jamais. I don't know if it's Jamais thing or sorry. What do you have to say? You don't have anything to say, Mr. Wilfred, Josiah, seventh followers, Charles. Who else is here? Can I hear you? I'm looking at the comment section. Can we hear from you? Okay, probably there is nothing to say. Then let's look at Euro USD. If USD we are anticipating a move to this level, then Euro USD we should be anticipating the opposite direction, move to the opposite direction, right? 70% of the time it's going to work like that because looking at the base and the core currency, USD, USD is the base currency for USD and USD is the core currency for Euro USD. So 70% of the time, we have those pairs negatively correlated. So if you're taking a buy trade on USD and a buy trade on Euro USD, you're going to lose one trade or you're going to lose both trades. If you're taking a sell on both pairs, you're going to lose one trade, you're going to lose both trades. If you're taking a buy on USD and a sell on Euro USD, if the market goes against you, you're probably going to lose both trades. All right, you're probably going to lose both trades. Now it depends if it's a long term or short term, or so it really depends. But 70% of the time they are negatively correlated. just have to know that. Know it for GJ, for EJ, GJ and EJ, 70% of the time we move the same. Gold and Euro USD, 70% of the time they move the same, 60% by the way. Alright, I'm really sorry for the technical interference. Okay, so let's look at EU. Let's look at EU. But before we look at EU, I want to get feedback from the trade we analyzed last week. I'm literally not going to see it. I think it was on EU. Let's see. It was probably on EU. Let me go to last week. Okay. Last week we were expecting a move to the downside. It probably started moving and then went back up. We were expecting a move to the upside. Can't remember. Okay, we were expecting a move to the upside. The price had broken this trend line. Yeah, I can remember. The price had broken this trend line. We were expecting a move to the downside. So it probably moved for like 1 day and then just went back. That's what happened. We're expecting a move to the downside, the price broke the trend line. So basically, we would have been having an entry from here, and then the market moves to this level, which is not bad because this is support, previous support level. So now would have been a TP zone, right? Okay. Let me look at the comment section. Jameli, you're going to teach me how to pronounce that name. Okay. And then we're expecting a move to the upside. The price has done. It was currently on a trend line, and we're waiting for a signal. Yes, I think we're waiting for a bullish rejection candle to move to the upside. This kind of candle, that's what we're waiting for. And it did not happen. So that particular day, we did not take that trade. And then what happened the next day? Price broke out here, retraced, and then moved down. So that was a good preview. We are going to start with the weekly time frame. On the weekly time frame, we want to look at the overall move. Let me check if you guys are seeing my screen. I think I have to use my phone. I don't want to go ahead. Let me be following on my phone so that the moment I'm not seeing the screen, I'll know that you guys are not seeing this. Alright. Let me just FN first. Okay, good. Now, the weekly time frame. Okay, that's that. About the weekly time frame, what do we have? Let me reduce this. What the hell? Okay. The market has been moving in a range, basically. The what we are going to look at is the current actions, the current price action towards the current price. The price action towards the current price, that's what I'm trying to see. So we have support, resistance zones mapped out. We have the latest resistance zone towards the market price equally mapped out. And then what do we see? This is the weekly time frame. What happened last week? Last week, there was a bearish rejection, bullish rejection rather. There was a bearish candle and then we saw a bullish rejection, but the candle closed as a bearish candle. These are very informative candles because immediately after a bullish momentum candle, first of all, immediately after a rejection candle, which gave us information that they might be biased in the market. What did we see? We saw a very long push of the market to the upside. That was the whole week the market pushed up, right? And then what did we have? We had like a retracement here. This was a retracement. And after that retracement, the market pushed up again, giving us information that is probability that the market is going to go up, right? Now, what next do you have to see? You don't focus now below. You don't focus only below. Look at what's happening above. We had very strong supply zone up. And then this is the weekly time frame I discovered that there were a lot of weekly rejections here. A lot of rejections here. So what I'll do is I'm going to map out this rejection zone. I'm going to map out this rejection zone here. That's going to be a resistance on the smaller time frame. We are going to see that. So what I'm saying, like overall, what I'll say is for now, I'm going to buy USD, Euro USD if only it crosses this line above. I'm going to buy Euro USD if it crosses that line above. Because of this supply zone here, and I'm seeing rejection. Yesterday, the market was selling, and probably today, the market has been selling. Means that there's probability that the market might still continue selling. But I will buy if only the market breaks this line above. I don't care what I break next week or whenever. As long as it breaks that zone above, I'm going to be looking for the buy, right? So this is what you have. Go to the daily time frame. On a daily time frame, we have a bullish move. This was the end of this downtrend, something like a rounded bottom or something here. The end of the downtrend, we had a push to the upside, break of structure, push to the upside, and so on. So price, what the price do when it finally got here? There was like a very, very deep pullback to this level, and then it's struggling to move up. Like as you can see, the bullish candles struggling to move up, right? So overall, we are going to say that the supply here is strong. The supply here is strong because when price got to this zone, it could not break. When price got to this zone last time, it did not break. Price got to this zone, it did not break. So price probably broke here, which was giving a good indication for a buy move. But what happens? What has been happening the entire day? Euro USD has been selling. Now there's something that we need to understand. Your analysis might be very, very good, and the market still goes against you. That's why you have a strategy and you have the win rate of that strategy, right? The strategy might be 70%, 65%, even out of 20 trades. If you have 10 good trades, you have, yeah, it should be 10 good trades, or even 8 good trades, you want to see 3, then you're definitely on a win. Follow your strategy properly. Because the losing trade, let's say you're risking 0.5 for 3%, 0.5% for 3%, or 0.5% for 1.3%, 1.5%, that's 1 to 3. And if the market hits your 0.5% 11 to 12 times and hits your 3% just 8 times, you're still going to be in profit. That's basically it. You're going to be in profit. So when you're risking in your account, always risk in percentages because it's going to help you to know if you're in. But your strategy can still be 46% and you're profitable. 46%, I'll just say that what? Maybe out of 100 trades, you had 46 winning trades, and then you had I don't know man, but that's going to be like 54 losing trades. Now the 54 losing trades, what percentages were you losing, right? Maybe you were losing like 0.5%, 0.2%, and your winning trades, you're winning 1%, 1.5, 3%. You're basically up because you have covered up all the losses. That's it. I know you're not seeing my screen again. Let me share. Okay, you see my screen. You're about to see my screen. I was just explaining the proper risk management that could be done, and then telling you how your analysis could be very, very good. But this is it. I'm waiting for the market to basically break this candle, this line here, if I want to buy. Now let's look at the opposite direction. On the daily candle, I'll say this is the daily high zone. This is the daily high, which is a resistance, right? And then the previous day low is here. The previous day low is here. So generally, I'm on a sell trade on USD, on Euro USD. That was like since 5 p.m. So I'm expecting some expectations short term. So because I said long term, if the market has to break up here, that's when I'm going to be taking a buy. The market will still come up here and then sell. So what I'm saying is I'm expecting the market to come and then maybe close below this daily low, or at this zone where it is, there might be a retracement. So I'm broken even on my trade, but then my general expectation is low. If it gets to this particular level where my cost is up, then I'm going to be out of the trade profit. So this is what happened. We had a move right from this upside to this zone, which is the previous resistance. You always have to look at this zone. So maybe definitely some people would have been taking out from here. You can be breaking even from here to just be on the safe side of the trade, because this is the resistance zone, and there's a probability that the market acting to this resistance is going to consider resistance become support and then move up, right? So you don't want to be caught up in all of that shit. But now we have a strong uptrend, high, low, high, low, high, low, and then so on. So what can we do now? That's the question. I'm going to have a line here. Okay, there's just a lot happening to this. Wow. There you go. Again. Let me just have it here. See if I can move it like this. Okay, we have something like this. It's not going to be proper. It's not going to be proper because I don't know what it's been. We have something like that. Okay, according to uptrends and whatever, prices are the support of the uptrend. But you cannot enter now. Why? Because you're seeing a lot of bearish momentum from up here, so you cannot just go and start buying. You should be trading. You shouldn't be trading against the trend. Yes, this is an uptrend, but this is a 4-hour time frame, and maybe if you go to the 1-hour time frame, 55 minutes, 50-minute time frame, you're going to basically have like a downtrend, downward movement of the market, right? But you cannot just enter a buy trade from here. You cannot enter a buy trade from here because we have seen right from a daily candle that we're expecting price to get to the previous day low. We're expecting price, the previous day low is somewhere here. No, it's here. This is the previous day low. So we're expecting price to get right down here. That's basically the expectation. So I'm not seeing any trade that can be entering on Euro USD now at this particular zone. Except we have a rejection from here and then price starts going up. Basically looking at down the 30-minute time frame. Very informative candles. Price is neither buying or selling. We have a lot of indecision at this zone. We have a lot of indecision at this zone. So you can just wait. If you want to take a buy on Euro USD, you can wait. If you want to take a sell on Euro USD, you can wait. And when I talk about waiting, we all know what waiting is, right? You're going to be taking a sell if you see a breakout at this zone. So you're going to definitely have the market move to here. You can be entering this on the 5 minutes so that you see the pips. But the pips in Euro on Euro USD, they don't really move a lot of volume. So maybe from year to year, the 0.01 will be giving like $4 to $5 and so on, basically. But now if you're having a buy, probably this candle would have successfully closed as a bullish rejection candle. And then you can have a buy from here. Let me just put this here. you should be having a buy if the market closes above here. Yes. If you want to buy, you should be having a buy if the market closes above here. And put your stop loss below this zone. You put your stop loss below this zone. If you're having a buy, the market should have closed above here. You're taking your profit here. So your stop loss should be below this zone. But if you're selling, then the market should break this option line. And if you break the option line, I know that's just one conference. Then what else do we have? There's a lot of supply here, there's a lot of market move here, right? So we're expecting that okay, the market is going to move to this zone. This trigger, what triggered the uptrend here? That's basically it. That's basically it. But I'm already in the trick, so I didn't even know what to get in. When did the screen go? I'm actually still seeing it on my phone. Yeah, I should be seeing it now. So let me hear from you. Let me hear from Mr. Wilfred. What do you think? What is your perspective? What is happening to? Why am I spending so much time with you? What is happening to Euro USD? What do you think will happen to Euro USD according to your analysis? Mr. Wilfred, Josiah, what do you think will happen to Euro USD? You should also give your thoughts. Gemma, what do you think will happen to Euro USD? Are you seeing a continuous drop of Euro? The funny thing is that there was a fundamental on Euro like a few hours ago and it came out positive. Like the market was buying. And so basically there was a fundamental on Euro and Euro came out positive, right? That's basically why you're seeing those reactions. And it was a high impact news. So it really affected the market, and we had that by which I consider a retreat me. I consider a retreat because I'm in the sell cheap. Whatever. Please, can I hear from you guys? I want to also hear from you. What's your POV? What's your point of view? Right? What's your point of view as to what you think about Euro USD, Euro USD that we're analyzing now? If you have a point of view, and then I think we have really done a lot today, even though we had a lot of inconsistencies, and I'm so sorry about that. So sorry about that. Why did I sign it? Okay, so I'll be taking my leave and there's no body talking. But if you want to buy Euro USD, like I said, only wait for price to cross above 1.13. That's a solid advice. Wait for price to cross above 1.13. This is a 30-minute time frame and you can see that there is no rejections there. If price crosses above 1.13, you enter your trade with a confirmation, right? Because we already have price on an uptrend. So when you enter your trade confirmation, place your stop loss below this zone 1.13777 and so on. Because at least it's a little bit protected. The next zone where you place your stop loss is right down here, right? So, but if you're selling, also wait for price to break out from this trend line, right? These are the stop loss of the people who supposedly be buying, be your entry, be your after entry. That's what I'm trying to say. So if the market breaks out from here, then you have a sell, and market gets a leave because this is the low, the previous day low. I'm not sure it's I'm not sure it's happening. When price gets to when price gets here, this is the low of the daily candle. That the previous day's candle closed up here, starting here, it was a bullish candle and closed up here. So if the market is moving to this level, must have come to this previous day low and then strip liquidity here, right? At this particular zone. So if you are saying you be in the sell trade, you have left by there. That's great, great, great. Screen I'll show you. Okay, guys, see you next Tuesday. Ha. Wahala. Wahala. Okay, when you say positive on EU, positive means that the market is buying. Negative means that the market is selling. Because when the currency is appreciating, it's buying. The value is positive, value is increasing. Negative value is decreasing. So if you have positive on EU, then it means that you're expecting EU to keep buying, right? And if you have a negative on USD, right? So I think that's very, very okay. And I like to have the market get to my zones because like if I'm waiting to buy EU, if I were not in sell trade already on EU, I've really broken even. So even if the market is chasing, it's really no big deal, even if it's going to hurt. Yeah. Like I'm saying, if I were supposed to sell EU and I'm waiting for price to break out from that trend line, right? What I'm going to do this waiting time is I calculate my position size. I calculate how much I want to raise, calculate all of that and get my lot size, get everything ready. I don't like I'm not going to put a limit or an order rather because I'm watching the screen. But if I'm not watching the screen, I'm going to put an order, I'm going to place an order. Right? I mean that I'm going to place sales stop, I'm going to for price to break down, and I'm going to price to break above, I'm going to place a buy stop. But if you just open the market and within 5 minutes you're seeing an entry without proper analysis and all of that, you're going maybe a wrong position size, a wrong lot size, not knowing how much you're risking and all of that. So it's always good to risk in percentages. Like if I lose the trade I have on EU now, if it hits my stop loss, I'm going to be losing 0.5% because I was risking 0.5% of my account for 1.5%, right? And I was probably like 3 trades. I was risking 1.5% of my account for 6%. I don't know math, but that's something that was so that's it. That's basically it. Okay, bye. Have a nice day. I'm sorry for all the inconsistencies. I'm glad that you guys stopped till the end. And then when we come back next week, we'll see what happened. Hopefully, nobody clears our analysis up. But just save it. Please always save our analysis so that when we come back, it's good that we see where we went wrong, we see what happened to the market and all of that. You don't just do the analysis and then leave it. So then next week we'll come to a new one. No. Next week we'll come back, we're going to look at UG, what happened on UG based on our analysis today. And then what happened on EU based on our analysis today. What do we analyze again? GBPJPY. So please just screenshot the analysis and keep, and then see you next Tuesday. Bye.